Hello, everybody. My name's Bill. We're talking today about EOT cyclostochastics. Inside the stochastic indicator is a setting where you can smooth it, which is the top one, or you can not smooth it, which is the bottom one. And you can notice some differences here between the top one and the bottom one here. In this case, the the bottom one was a little bit more jaggy, where the top one wasn't. And you can see, even though the top one was smoothed, it's pretty darn quick and pretty darn close. Here's a little jaggy down here on the unsmooth one, but the smooth one doesn't have it. And if we looked at the little bit, couple of more differences here, we can see that the smoothed one is pretty darn good in that it doesn't turn very late for being smoothed. So I just wanted to point that out. Inside the stochastics, you can smooth it or you don't smooth it. There's no length settings because everything is fully automatic with us. Every indicator that we have is self-adapting, self-adjusting. So that's great, Bill. It doesn't look jaggy, but how do we use it? Well, let's get rid of the jaggy one and look at the smoothed one instead. On top of price, we're looking at the euro. We have a 21 period cycle moving average, a very popular moving average of ours. And the stochastics smoothed, which as far, you know how I feel about this kind of stuff. I don't feel like, I think technology has moved on from this type of stuff, but I have to say that this stochastics, if you have to use the stochastics, I feel like this one is sophisticated enough, and I feel like this one has been worked on enough by us that I feel good about it. I feel I would look at this stochastics, even though I'm highly against technology that is already built into the platform. This one isn't. This one is from Eotpro. It's really quite sophisticated and self-adapting and changes its length and is pretty good. And the way that you would use something like this would be where you can see how it turns red and how it turns green. It's giving you areas that are highly overbought or highly oversold. And if the moving average is red and the stochastics is red and everything hooks down together, it's a wonderful place to go short. Here's an area here where this stochastics is low. It didn't even come up to the high line, didn't even come up to overbought, but because it's telling you that the strength is very, very weak and the moving average is pointing down, go short. Here in this area here you can see we hooked up here, but the moving average was pointing down. Don't go long here. Don't go long. Here is an area where the moving average hooked down, or the stochastics hooked down, but the moving average is pointing up. Don't go short there. Now you will go long here because the moving average is pointing up. Stochastics is hooking up from the bottom. Everything looks groovy. The moving average is still long. The stochastics is hooking down. Don't go short. Moving average is pointing up. Wait for the moving average to hook over. Look for entries here's an entry here and an entry here where you're getting into the market when it's very, very weak, when the stochastics is showing, actually is showing very, very, very strong downtrend. So you can use that stochastics and that moving average together. Other people use this like in a different way as well. They might drag this thing over price like this. And even if you were to use the stochastics to get in when the thing hooked, go long here, not bad. Go short there, not bad. Go long there, well, you still made money there. Go short there, well, you made money there. go long here. Well, a little bit of a pullback against you, but then eventually, and the stochastic still stayed up. You made money there. Hooked down, you made money there. It hooked up, you made money there. It hooked down, you made money there. It hooked up. Well, you probably didn't make any money there. Hooked down, you made money there. Hooked up, probably not there. You made money going down here. So you see what I'm saying? Even if you just look at this, it's pretty darn good. It's pretty darn good. Even with smoothing turned on, it's pretty quick to react to the market. And another cool thing is that it's not getting faked out with these pullbacks. Look at this. Look at how it's starting to hook up here. It's starting to hook up here, but price continues to come down. Price continues to come down here. I gotta say, that's pretty impressive. I really like that. For those of you who like stochastics, I think this is one of the better ones out there right now from EOT, called and one of the good things about it is that it uses cycles as one of its inputs. So it's looking at market cycles, and it's dynamically self-adjusted and smoothed. Pretty darn good for stochastics, I must say so myself. EOT Cycle Stochastics, ladies and gentlemen. Thanks for listening.